Something huge just happened for the first time. This is a huge step for Bitcoin and will really help in the future. This will really push up the price of Bitcoin. This is something that I think is very important and something that you should know. If you don't mind, hit subscribe, turn on the bell notification underneath the video to see future videos just like this one. While you're down there, there's a link to Margex in case you want to start trading on leverage. You can start with the link underneath the video. You can also chart using TradingView right in Margex. As you can see here, we're getting lower highs and higher lows as well. Might have an explosive move here soon. In addition to this inverse head and shoulders, maybe you want to sign up with the link underneath the video. And when you do sign up and deposit, you get 20% deposit bonus using my link that can be used towards fees for the first couple weeks. So definitely check out this link underneath the video to get started. We had this really important post this morning. This is not the big thing that just happened, but as per the inflows of Bitcoin ETF, some additional TradFi perspective. LPL, which is a wealth management firm, one that I've actually, I almost worked at a company that used LPL in the past. They have 22,000 financial advisors. Their LPL has 9.4 billion in AUM, and they're waiting an additional 3 months before allowing advisors to sell Bitcoin ETFs to clients. We've heard about this from other institutions as well, like Merrill Lynch only offers these ETFs to high net worth individuals. Vanguard doesn't allow any access. Edward Jones does not offer any access as well, even though they have 19,000 financial advisors. It's going to be a process to get these approved, these Bitcoin ETFs approved, and going through all these different financial advisors will take time. Like there's some due diligence I read today about the largest pension fund in the world is doing their due diligence on these ETFs right now. They don't just automatically start buying them just because they have access to them. They still have to do their own due diligence, see if it's right for what they're trying to offer clients. A lot of them don't spend a lot of time researching things that they don't have access to. That makes sense. Like we only have so much time in the day. If I told you about something that you couldn't have any access to that didn't affect your life at all, you probably wouldn't spend much time researching it, right? So it does take time. Now, what just happened, which is actually a pretty big deal, Fidelity is now allocating 1% to spot Bitcoin, and they're all in one conservative ETF. They will all do it. This is breaking news as of now. And when you actually look into this, the initial implications of this aren't huge. What is this? Well, it's a $111 million fund that allows you to invest into different assets, obviously. Like here it breaks it down: investment grade debt, US equities, international equities, Canadian equities, cryptocurrencies. It's just a way of diversification. Now, what I've said though in the past is once we start having Bitcoin allocated, or Bitcoin allocation in different portfolios and different ETFs, that is an important thing. This allocation, this 1% allocation, $1 million, doesn't make any difference long term. It doesn't. But being included into different ETFs like this does make a difference. What do I mean by that? Well, I don't know if you knew this, but most people investing in retirement funds today are using target date funds. In fact, more than $2.8 trillion were invested in them at the end of 2022. And this is how more and more people are investing, with 98% of employers offering target date funds and 92% of them as the default investment option. Employees' diversification has improved greatly over the last 10 years. 94% of plans that Vanguard administers offers target date funds. In an update to its report, Vanguard noted that 6 out of every $10 contributed were invested in target date funds as of April 2020. In their plans from firm administrators. Many people don't change their plans after they sign up to a 401k or after they start a new job. They don't feel like they have a better idea for what they should invest in, and they just continuously put money away. They just put 5%, 10% of their paycheck away every single 2 weeks, every single paycheck, and it just goes to buy whatever assets. Now, this Bitcoin being included in this fund doesn't really matter that much. Like I said, $1 million of their $111 million. It's not like this is a huge fund. It doesn't get great returns. It might make some noise from increasing the annualized return up from 1.2%, but that doesn't really matter all that much. What does matter is that, again, it's being included in more funds. Bitcoin is being allocated to in portfolios for diversification. Once Bitcoin is passed by a lot of these different institutions, once they look at how the Bitcoin ETFs work, how Bitcoin works, how it appreciates over time, they'll start including it in more retirement funds. They'll start including it in target date funds. This is a major turning point. This is just the first step. This is a big first step, though, and will cause more and more money to flow into Bitcoin because it will be included in more and more target date funds. It will be included in a way that continues to buy Bitcoin off the open market. And what would be the most bullish thing for Bitcoin? Well, long term, it would be for people that are looking to retire someday to buy Bitcoin. Now, why is that so important? Well, they have a long time horizon. We would have people that start a job at 21 years old, 22 years old, start buying $10, $20, $100 maybe a Bitcoin every single couple weeks. They wouldn't even know it. They would just buy and hold for 30, 40 years, then maybe start distributing when they get older. Maybe this grows to be a big portion of their portfolio, and after a while, maybe they own a Bitcoin or two. They look at it and see that they made the majority of their returns from Bitcoin. They realize that they're allocated towards Bitcoin and they learn more about it. The other thing that could also push up Bitcoin's price a lot is just companies and countries buying Bitcoin, and we hear more about that every single day. I talked about that a little bit in the video that I made this morning. I'll put that video on the end screen. But these are two of the biggest things that can happen for Bitcoin, where people just buy a lot of Bitcoin and they don't want to sell, or they don't sell for a very long time. And this was the first step. Today, this is the first time that I've seen Bitcoin be allocated to in an ETF that wasn't a Bitcoin ETF, like some kind of broad commodity ETF. Now, I want to hear your thoughts on this. We've seen many studies in the past talking about how people should have an allocation to Bitcoin. ARK Invest, Kathy Wood, has talked about increasing the allocation. I think she said like 5% at first, then 12%. Now she says like 20% should be allocated towards Bitcoin. BlackRock's made a study showing that if you break down the numbers, a risk-averse investor might want 85%. A risk-tolerant investor would actually leverage long all into Bitcoin. Those numbers are nuts. But where we start, and I'm not saying nuts as in a bad way, but I don't think many people could handle that volatility even if the numbers work out. What we have to start with is a 1% allocation, a 2% allocation, 0.5% allocation. We want BlackRock to start pushing. We want other institutions to start pushing for a small buy in Bitcoin, and then start to show, hey, you did really well this year. You got 100% return in Bitcoin. Maybe you want to allocate 2% or 5%, something like that. That is what moves the needle long term. So I don't want people to look at this and just breeze past this news. I also don't want you to think, wow, this is nothing. Because honestly, the numbers aren't huge right away, but it snowballs. It snowballs more and more. And eventually, we will be hearing news about how Bitcoin broke $100,000, $150,000 in price, and how Fidelity is suggesting a 6% allocation to Bitcoin, or in this target date fund that got $1 trillion in inflows last year, they are putting Bitcoin as an allocation. This is the starting phase to that. Now, anything can happen short term. I've talked about that. We could see some larger GBTC sells because of some companies that went bankrupt that have GBTC. But short term, this is all noise. It doesn't matter. Short term is a buying opportunity. Long term, you want as much Bitcoin as possible. If you're bullish on Bitcoin, short-term price action going down is great because you can buy more. Let me know your thoughts, though, underneath the video. I really do appreciate it. Check out the link to Margex, and also, in case you want, you can get access to HGAccess underneath the video. I do have a couple big things that I'm going to be talking about here soon that could be really helpful for you as well. It's something that I'm going to use, a couple things I'm going to use. So definitely check out the channel. Make sure that you are subscribed so you can get access to those things in the very near future. I'll see you in the next one.